Income Tax 2020. Itemized deductions, medical and dental expenses. Come in, relax with Income Tax 2020. Itemized deductions, medical and dental expenses. With regards to our income tax equation, we're going to be down here on the below the line deductions and the itemized deductions as compared and contrasted to the above the line deductions or the standard deductions. Remembering that we can break our income tax equation into two halves. The first half basically being a modified income statement. The second half then being the calculation of the tax and application of payments and credits to get down to the bottom line, that being tax refund or the amount due. We're going to be on the first half still, the up top, basically modified income statement. We're talking about the below the line deductions. And when I say below the line deductions, I'm saying that's going to be one of or the greater of either the standard deductions or the itemized deductions. Here we're focusing on the itemized. We say below the line oftentimes to contrast to the above the line deductions, which are the adjustments to income, which have different names for them up here, right? These above the line deductions could be called deductions for AGI. They could be called Schedule 1 deductions and so on. So above the line, below the line, these we're going to call below the line. And then the below the line deductions, we take the greater of either the itemized deductions or the standard deduction. So anytime we're thinking about something that's in the itemized category, we're thinking about something that will be on Schedule A, and we're thinking about whether or not those itemized categories will add up to a combined total that will be greater than the standard deduction, noting that the standard deduction is dependent upon filing status to see whether or not we would get any advantage from the itemized deductions. Here it is on the 1040, so we're going to be concentrating down here on line number 12. I know this is small here. We will look at it in more detail in a following presentation when we see this in the actual tax software and zoom into it. But this line says standard deduction or itemized deduction, and the standard deductions will be to the left on the form. So when you start thinking about itemized deductions, that can kind of help you to think whether or not someone is going to be able to clear the itemized deductions to be able to itemize, to be able to take advantage of them. In other words, clear the standard deductions with the itemized deductions to be able to use them. So here's going to be the Schedule A. So now we're jumping over to the Schedule A. The medical and dental expenses are typically at the top of Schedule A. Now note that there's going to be a cap, and this is going to be the main thing that you want to keep in your mind with the medical and dental. Not only do the combined itemized deductions, all itemized deductions have to be greater than the standard deduction, but you also have this basically amount of the AGI limitation. So it has to be over 7.5% of the AGI, and that's what this calculation is doing before you get anything that would even add into this to the itemized deductions. So the medical expenses are limited also, and as people's income goes up, that means there's going to be a higher limitation, meaning there's going to have to be more medical expenses before you're going to get a benefit from them. And you can see that calculation here. We said the medical expenses were $1,000. The AGI, adjusted gross income, on page 1 of the 1040 was $100,000. 7.5% of that is $7,500, which is greater than the actual deduction or the expenses that we had, and therefore there was no deduction, even an amount that would be included on the Schedule A that would then be added up to see whether or not the itemized deductions would be greater than the standard. So we have this limitation. This is kind of like a floor limitation. You got to get up to that floor or over the floor of the 7,500 before you start to get any benefit from them. So keep that in mind. Note that at the time of recording, the 2020 tax form or Schedule A has been updated for 2020, so we'll be able to look at the 2020 Schedule A and we'll be able to work with it within the tax software as we'll do in the following presentation. However, the instructions for itemized deductions for Schedule A, as well as Publication 502 medical and dental expenses, have not been updated yet as of the time of this recording. So the information we're taking a look at has primarily gotten first from the 2019 instructions in Publication 502, and then we made modifications to it. Obviously, when you're doing research on it, the publications for the 2020 should be out. So we took the 2019 information and basically made adjustments to it. And then once you go back for the research, you want to make sure that, of course, you're going to go to Publication 502 for 2020. If you're looking at 2020 tax returns, we may include that once it has been released, so that you have information and a reference to that. But of course, you could search the IRS website irs.gov to get that supporting documentation. So you can deduct only part of your medical and dental expenses that exceed 7.5% of the amount of your adjusted gross income on Form 1040. So you got the adjusted gross income. That's usually the thing that we think about when we have phased outs, which is kind of like a cap. Usually we think of caps, when your income goes over a certain amount, you lose the ability to deduct. This is kind of like a floor. This is kind of like the opposite, meaning you can only deduct the amounts after you clear the floor of the 7.5% of the AGIs we saw in the example. And that's in order to include it in the calculation for the itemized deductions to see whether the itemized deductions will be greater than the standard. So if you're talking about someone that has more income, like their income is higher as people's income goes up, then they're less likely to be able to clear that floor with the medical expenses. However, as their income goes up, they're more likely to be itemizing in general because they may own a home at that point. They may have the deduction related to the loan interest on it, and their state taxes also are another thing that could be somewhat high as people's income goes up. So if you receive distribution from a health savings account or a medical savings account, you want to see publication 969 to figure your deduction in that circumstance. So examples of medical and dental payments you can deduct. To the extent you weren't reimbursed, you can deduct what you paid for. So in other words, what's going to fall into the category of something that I might be able to include in medical and dental expenses on the Schedule A and possibly get a deduction for it. From a broad perspective, this can seem fairly straightforward. In other words, the items that could be included here you would think would be medical and dental expenses that were not reimbursed in some way, possibly by insurance. But when we get into the details and the categorizations of medical and dental expenses, it can get kind of confusing. For example, we might have medical type of practices that are not completely accepted at this point in time. There could be questions as to whether or not then they would qualify for a medical expense, or if we have like cosmetic type of things versus something that's going to be required by the doctor, is that something that can be included as a deduction? So we're going to go through some of the categorizations here. And remember, these are the types of things that we took mainly from the 2019 instructions that should be pretty much the same for 2020. But if you're looking at one of those areas where you're not quite sure if it's something that could be deductible here or not, then you want to do a little bit more research. And once again, the instructions, the publications are a place to start, and then you could go on from there with regards to research for medical and dental. So insurance premiums for medical and dental care, including premiums for qualifying long-term care insurance contracts as defined in publication 502. But see limitation on long-term care premiums you can deduct later. Reduce the insurance premiums by any self-employed health insurance deduction you claimed on Schedule 1. So if it's a self-employed deduction, then you might be able to claim it on the Schedule 1, as we talked about in a prior presentation. You can't get you can't double dip on the deduction, both on the Schedule A and on the Schedule 1 is the general rule. So you can't deduct insurance premiums you paid by making a pre-tax deduction to your employee compensation because these amounts are already being taken from your income by not being included in Box 1 of your Form's W-2. So if it's already been included, like your employer removed it basically from Box 1 of your W-2 because you're getting the insurance through the employer and it's not taxable, so they removed it from Box 1 of the W-2, then it's already not included in income. And once again, if you put it in as a deduction on the Schedule A, you'd basically be double dipping at that point, getting two benefits from the one deduction. It'd be taken out of the W-2 and added as an expense. If you are a retired public safety officer, you can't deduct any premiums you paid to the extent they were paid for with tax-free distributions from your retirement plan. Prescription drugs or insulin. So obviously prescription drugs and insulin would be in the items that possibly could be deductible. And we have the acupuncturists, chiropractors, dentists, eye doctors, medical doctors, occupational therapists, osteopathic doctors, physical therapists, podiatrists, psychiatrists, psychoanalysts, medical care only, and psychologists. So some of these, again, that were included or you think might have included later, something like an acupuncturist is something that possibly you might think, well, is that something that should be, it's kind of, you might think of it as not totally mainstream. So is it something that can be deductible? And those are the kind of things that you'd go into. Also, there were questions about, a psychiatrist and whatnot in medical care, because there's a question as to whether or not it's going to be like an actual disease or a problem. Is it defined as a sickness or an illness, or is it designed as just care or self-care? So those things have often been a problem, or questions about whether or not they should be deductible or not. And obviously, if you get into things like diabetes and whatnot, if you get into obesity and that kind of stuff, the questions become, well, is this something that's a sickness or disease that needs a doctor's remedy for something like even like diets or things like that, or not? And so that's when you could get into the questions about whether or not something would be deductible here. And there's a lot more research that you can go into with regards to that type of information, but this would be the starting point to go into it if you have questions about them. So we have the medical examinations, x-ray and laboratory services, insulin treatment, and whirlpool baths your doctor ordered. So again, a whirlpool bath is another one that, it sounds kind of like a jacuzzi, so that's another one that you could think of people getting a whirlpool bath, possibly both for personal and medical reasons, and the question would then, you'd want to do research, and obviously if it was doctor recommended of something like that, then again, you'd want to make sure that it could be an expensive item, of course, and you'd want to make sure that you've done the research to claim deduction, or and documented everything that you need to do if there's something of that nature. Diagnostic tests such as full body scan, pregnancy tests, or blood sugar test kits, nursing help, including your share of the employment tax paid. If you paid someone to do both nursing and housework, you can deduct only the cost of the nursing help. So if you're paying someone to help you with nursing and, of course, housework, you need to be applying the nursing amounts to the medical deductions. To the extent you weren't reimbursed, you can deduct what you paid for hospital care, including meals and lodging, clinic costs, and lab fees. Qualified long-term care service, you could see publication 502 for more information there. The supplemental part of medical insurance, Medicare B. The premiums you paid for Medicare Part D insurance, a program to stop smoking, and the prescription medications to alleviate nicotine withdrawal. And again, that's another one where, you might have had a question about that. Well, if I get the medication to alleviate, a craving, is that a medical thing, or is that like a drug that you should be deducting and whatnot? So these are types of things that you could do some research on, or may need to as they go forward. So again, the broad categories of medical and dental seem fairly straightforward, but when you get into the weeds of it, you could end up with questions, especially if the doctor's recommending large, expensive equipment or something like that, then as to whether that would be deductible. You can do some research to drill down on specific items oftentimes. A weight loss program as treatment for a specific disease, including obesity, diagnosed by a doctor. So again, this is another one where you might, like obesity, is a more recent item that people they basically claimed it or recategorized it as a disease, because then it would then qualify for like law purposes for more things such as tax deductions. As people get elderly, they might have some type of equipment that they might need to put in to like get upstairs and this kind of thing, which could be other things that you might do some research on as to whether it could be a deductible item. Obviously, if you buy anything that is going to be something that could be for medical purposes, it's quite likely that the person that's selling it has information as to whether it could be deductible or not. You can't trust them completely because they're trying to sell you something, but they might point you in the right direction just to get the research on it, just to make sure, and then make sure you get that information to the tax preparer, or that you have that information, or that you're asking about that information if you know that somebody has kind of medical conditions that could require expensive equipment or something like that. To the extent you weren't reimbursed, you can deduct what you paid for medical treatment at a center for drug or alcohol addiction, medical aids such as eyeglasses, contact lenses, hearing aids, braces, crutches, wheelchairs, and guide dogs, including the cost of maintaining them, surgery to improve defective vision, such as laser eye surgery or radial, I won't even say that word, lodging expenses but not meals while away from home to receive medical care provided by a physician in a hospital or a medical care facility related to a hospital, provided there was no significant element of personal pleasure, recreation, or vacation in the travel. So if it's a medical travel, then the actual travel to the doctor may be something that could be included. Don't deduct more than $50 a night for each person who meets the requirements in Publication 502 under lodging. To the extent you weren't reimbursed, you can deduct what you paid for ambulance service and other travel costs to get medical care. If you used your own car, you can claim what you spent for gas and oil to go to and from the place you received the care, or you can claim 20 cents a mile. So you got kind of a mileage rate there. It's a different rate, and that rate is something that could change in 2020, but again, it might not be applicable for many people, but it's different than the mileage rate that you might have for other kind of things like a Schedule C when you're deducting the auto. So don't just pull the same rate for there. You got a different rate here. So add parking and tolls to the amount you claim under either method. Cost of breast pumps and supplies that assist lactation. So as we can see, the list of things that could be potentially deducted is quite long, and if you're imaginatory about it, you can come up with things that could be still in the gray area as to whether you can deduct them or not. Now let's go into some of the things that they say you cannot deduct. And again, these are things that we're pulling for the 2019 information. They could change in 2020, but they should be primarily the same here. So we want to get into some of the details with it. Again, if you got something that you're a question about whether or not you can deduct it, then you want to go in and do the research, and you want to start with the instructions for the Schedule A and then this publication, and then you can go from there with your research. So the cost of diet food. So notice that we said that obesity is something that basically they categorized for many purposes as basically a disease, and that allowed some deductions possibly related to it to be more likely to be taken, and some other legal consequences related to it. But typically the diet food is not something that would be included, even though obviously the doctor may have requested a certain diet. And I think the thought process by the IRS is basically, well, you got to buy food anyways. If you're buying, they can't distinguish whether or not you're buying food for the diet or not, and therefore, it seems like people might just start deducting their grocery bill, which is they're probably trying not to have that happen. So, cosmetic surgery, unless it was necessary to improve a deformity related to congenital abnormality, an injury from an accident or a trauma, or a disfiguring disease. So this one is often kind of a questionable area because, if people want some kind of surgery or whatnot, then the question obviously will be, well, is it cosmetic or not? And, if they label it as cosmetic, then you don't get the deduction, even though it can be high. And if not, and so there could be questions as to whether it would be cosmetic or not, but that would typically be the category that you're looking for. You want it to not be cosmetic so that you can deduct it, basically. Life insurance or income protection policies, the Medicare tax on your wages and tips, or the Medicare tax paid as part of the self-employment tax or household employment taxes. So when you pay basically your self-employment tax out of your W-2, the Medicare, or if you're self-employed, in the self-employed tax, which is the kind of like the payroll tax equivalent for self-employed individuals, the Medicare that you pay, Social Security and Medicare, kind of like the payroll taxes, the other federal taxes that are paid other than the federal income tax. Examples of medical and dental payments you can't deduct: nursing care for healthy body. So if it's nursing care for a healthy person, but you may be able to deduct a credit for the amount you paid. See the instructions for Form 2441, illegal operations or drugs. So obviously, if you're doing something that's not legal, even if it's for medical benefit, then you can't deduct it. Imported drugs not approved by the U.S. Food and Drug Administration, the FDA. This includes foreign-made versions of U.S.-approved drugs manufactured without FDA approval. So obviously, the fact that it goes through FDA approval is good, because then it's more likely that it's you could trust it a lot more. But obviously, there's a big cost to that, and you might be able to get cheaper drugs somewhere else that are cheating the patent and this and that or whatever. But those won't be deducted. They can't deduct those, obviously. So non-prescription medicines, and I'm not recommending to use drugs from some other place. Yeah, I mean, you can depend on the FDA drugs, but I can see that drugs might be a lot cheaper that somewhere else. But in any case, Non-prescription medications other than insulin, including nicotine gum and certain nicotine patches. So if they're non-prescription drugs, then those types of things, they're trying to help you alleviate the nicotine addiction, which we saw some things that may be deductible related to it. But if they're non-prescription, then no. Examples of medical and dental payments you can't deduct: travel your doctor told you to take for rest or a change. So basically, if your doctor recommended a vacation, people, you can imagine people trying to do that one. Obviously, I'm sure there's probably court cases related to that and saying, hey, my doctor said I need to go to Hawaii, need to, and then you deduct the, but anyway. So funeral, burial, or cremation costs, also not included in medical expenses. That's kind of post-medical expense, you would think. In any case, you can include medical and dental bills you paid for anyone who was one of the following, either when the services were provided or when you paid for them. Obviously, yourself and your spouse. So if the medical and dental bills were related to yourself or your spouse, all the dependents you claim on your return. And that's what you would basically expect. The normal circumstance would be for yourself, your spouse, or someone else claimed on the return, such as dependents. And then we get into some kind of more unusual circumstances. Your child whom you don't claim as a dependent because of the rules for children of divorced or separated parents. See Child of Divorced or Separated Parents in publication 502 for more information. So you got separate parents, possibly custody rules related to them. Therefore, they might not be a dependent, but you may still qualify in those circumstances to take the medical expenses. Any person who could have claimed as a dependent on your return, except that person received $4,200 or more of gross income or filed a joint return. In other words, they received the income higher than the point that they could be claimed as a dependent, and that's basically kind of like the only exception as to why they're not a dependent. Then you might still be able to claim the medical expenses related to them, even though they're not on the return as a dependent. Any person you could have claimed as a dependent, except that you or your spouse, if filing jointly, can be claimed as a dependent. So if you yourself or your spouse could be claimed as a dependent by someone else, and that's the only reason that this other person that would have been a dependent but is therefore not, then you may still be able to get the medical expenses as a deduction in that case related to them.